Hi there, Evan here with Crypto and Markets for Friday, February 16th, 2018. Gonna go ahead and do another news blitz here for you on a Friday. Blast through the news. Y'all can enjoy your Friday and enjoy your weekend. The first thing I'm gonna show, this is the WTI Brent spread. Remember, I did this chart about a couple of weeks ago stating that if we got above $4.50, you'd see a decline in exports. Well, guess what? If you look at this chart here, we now lie at $3.30. Hence, the last 2 weeks in the US, you have seen inventory builds. Now, candidly, on the last report that came out on Wednesday, the build wasn't as big as I thought, so I will say that. But I think with this, you're going to continue seeing builds going forward. This target here shows parity. Personally, I don't think we're going to quite see parity. I think $2 is where it's going to be, meaning Brent's going to be $2 only higher than WTI, which is going to take a ton of exports off the market, and also probably force some of the OPEC countries into a bit of cheating as well too. Again, not a contrarian opinion, but I do think that obviously with the U.S. taking exports off the market and building up their own inventories, there's going to be a gap there. It's going to have to be filled. And I think the incentive there is just too great for them not to cheat. But again, my opinion. And of course, I do have a prediction on my channel. Click on my channel link. It's the home video right now, where I'm stating that supply is going to be 1 million barrels a day bigger than demand. And I think in the US it is going to start here rather soon. Speaking of OPEC, this is a Lee Sachs tweet from February 1st from a Bloomberg from Bloomberg by the looks of it. OPEC shipments to rise by 220,000 barrels a day to February 17th. That's the date, February 17, not the year 17. Of course, it's 2018 now. But yes, and if you look at the previous chart, this is basically what happened February 1st. We got under $4 on the spread. Then all of a sudden they come out and say OPEC's going to raise shipments by 220,000 barrels a day. So there you go. It effectively clarifies it. OPEC sees the incentive to cheat there and fill a gap. Okay. And this is the next one. This is an article yesterday from Zero Hedge. Canadian existing home sales crashed in January. Of course, here I'm not going to necessarily put you through the article. I will link it down below if you do want to read it. But of course, last month, OFSI stress tests. Of course, this is the first month where the new rules took into effect. And of course, as I mentioned in previous videos, you were seeing a lot of buying ahead of it. Now you're not, because the rules are in force. There's one more little thing I wanted to mention here, though, on this. Remember the Bank of Canada rate hike last month? And read that note. That's very dovish. I think finally here the Bank of Canada sees where they went wrong. They cut rates in 2015. They knew it was a mistake. They had to compensate. But by cutting at an inappropriate time, it essentially means to overcompensate, you have to raise too much at an inappropriate time. And that's where the Bank of Canada stands right now. They cut to 0.5, saw they shouldn't have done it, put it up to 1, saw that they overheated things, put it up to 1.25. Yeah, I understand that this doesn't sound like interest rates are very high. Okay, 1.25% historically is very, very low. But if you have to remember how much debt got created after the 2 rate cuts in 2015, this is really going to hurt. Because remember, on a 3 to 5 year fixed basis, if you took out a mortgage in 2015, the renewals for those are going to start this year. And when people see how much more they're going to have to pay for their mortgages, they're going to be in for quite a shock. Because mortgage costs are probably going up about 7% in this country, right? And on someone that's already almost overextended for their mortgage, add another 7%. That's a lot more people that won't be able to afford it. And that's why I'm stating by the end of the year, you're going to start seeing some serious foreclosures in this country. But again, I digress. And lastly, for my laugh of the day, Dennis Gartman, we all know him as the ultimate. He's writes the Gartman letter. He's the ultimate contrarian indicator to everything. This one was from yesterday from Zero Hedge. Yesterday we shorted global stocks, and we were obviously wrong. Dennis Gartman being wrong on a trade. Is this really breaking news here? I'll go through a couple of these lines here, then I'll wrap it up here. Last Friday, as futures are tumbling below the 10% correction level, we said that looks like it's time to buy. This is Zero Hedge, by the way. After he published Dennis Gartman's latest commentary, in which he said that we fear that a fully fledged bear market is now upon us, as one level of supposed support after another has been tested and has been found wanting. Okay, that's last Friday. And then he does this on Wednesday. We have been considering selling equities in global terms, as we noted here yesterday. Wednesday, February 14th, we sold US, Japanese, and European shares using our international index as our gauge, with the index at 11,896. We sold 1 unit in total, risking only 3% from our inflation point on the trade, or to 12,253, and thus we are obviously wrong. Then here's where it happened. Finally, now that we have adopted this initial short position, we should also have a point at which we admit that we are wrong, and that shall be 3% above our entry point. Hence, we are short of global stocks with our index at 11,896, and will run for cover and admit our error should our index trade above 12,253. One must always be prepared to admit that one is wrong. And guess what? As of yesterday at 3 p.m. Eastern, when the S&P was at about 2720, Gartman just 1% from being stopped. So there you go, 1% from being stopped from 2720. There you go. Y'all stay classy.